Hey there, beautiful traders. Welcome back to my channel. My name is Desmond Samuel. As you all know, your favorite YouTuber, your favorite trader, the most realistic and the most honest guy, one of the most honest guys that you can find, the very few honest guys you can find on the internet. Now, if you're coming across this channel for the first time and you're wondering what this weekly outlook thing is, so this is particularly a segment of my YouTube channel that I have actually set aside to comment on here every single weekend to let you guys know what's happening in the financial markets. Give you guys like a quick overview of a run through of all the trade calls last week, and then let you guys know or let you guys in on my trades that I have open at the moment and trades I'm hoping to take in the coming days and also weeks. So without wasting any much time, to kick things off here, we have S&P 500. Now I've been highlighting S&P 500 to the upside for quite some time. However, I have been talking about this pullback that hasn't happened or that is actually yet to materialize. As you can see here, I see no reasons as to why S&P 500 should not rally into 6,400 basis points. However, you guys know that regardless, or rather, I would say taking into consideration how the S&P 500 market moves, which is obviously upwards. It barely ever has some downtrend. There's never a downtrend with this guy. If you see a downtrend, it's practically just a pullback. All right. So if you go back and study how this particular market started, it's just been on a bullish trend since inception. So however, there's technically speaking, yeah, whenever you break a level, you tend to come back to retest that level. Okay, and the S&P 500 it has been long overdue for it is long overdue for a pullback, and I've been actually waiting for that pullback for a very long time. All right, so and I'm still waiting for that. So that is the conclusion on S&P 500. We still have this particular base around 5,300 basis points, all right, to pull back into. Then we can obviously blow all the way up to the 6,400 basis points. This guy is on a very, very steep bullish run at the moment. I see no as you can see here, this was this inverse head and shoulders pattern here, neckline breakout, retest, bounce, and then we've been going higher. However, for some reason, we just haven't pulled back to this particular base that we actually created off a demand level here. So we came on here to create a demand level, and technically speaking, once the market creates a demand or supply level, it tends to come back to retest that level before it heads in the initial direction. So now that is exactly what I'm waiting for on the S&P 500. As you can see, this is the weekly time frame, right? Because I got one of the comments that said I have to mention my time frame. So this is the weekly time frame, guys, and this is S&P 500. So if S&P is bullish on the weekly, I see no reason as to why I should be looking for bearish setups. All right. So we just want to go with the trend. So the trend now has created a demand level of 5,300 basis points. So we need to see a decent bounce off of that level before we blow all the way to the upside. Yeah. I see no reason as to why once again S&P should not give us 6,400 basis points either this year or early next year. We would definitely blast through all the way to 6,400 basis points. All right. So next pair now on my list. Actually, hold on, guys. Just give me a sec. All right, guys. So for the S&P 500, we need to see this guy pull all the way back down to 5,300 basis points, and only then we will be very, very confident to blow this guy all the way up, because I see no reason as to why the S&P shouldn't give us 6,400 basis points after we have had a decent retest. You can see that this was the most recent demand that was created here, and with my fibs, every single thing lines up perfectly with the between the 0.5 and the 0.618 region. So this is without any iota of doubt going to blow all the way to the upside. All right. So however, we need to balance out properly and test and rest well on 5,300 basis points. Once that level is settled and locked in, then we can now start looking at buying opportunities. Obviously, you just need to see a decent bounce, just like so. Entries at the bullish engulfing candle on specifically the 4-hour time frame here. Entries there, or even the 1-hour time frame, 15 minutes time frame. The whole bottom line of this is that you must have a very tight stop loss, probably maybe like 50 pips max, because you're gunning for over 1,000 pips. All right. So this is hold on, let me just double check. This is you're gunning for potentially, yeah. So if over 1,000 pips. All right. So you need to see this guy balance properly down at 5,300 basis points. And once that is done, we can now start looking to the upside. All right. So for S&P 500 is really, and this is one of the easiest pairs to trade. I kid you not, because listen, this is just in an upward trajectory. You get, you just have to find an entry and ride the wave. Easy. So the next pair now on my list will be the NAS 100, NASDAQ. So let me just, where is this guy? Okay, yeah. So NASDAQ on the other hand also has similar setup, right? So the NASDAQ is also looking very, very juicy, very, very clean at the moment. However, it still has some more work to do in terms of convincing us that it is actually done with all the rigmarole rolling, with all the loitering, and it's actually ready to go on the errand. Do you understand? Because what we do is send this market on an errand. So you can see that this is a trend line that we're actually working with now. And then this is also a candlestick. This is a weekly time frame. This is a reversal candlestick, guys. This is a reversal candlestick pattern here. We have the bullish engulfing, followed by the indecision, then a bearish engulfing, or even the same length as the bullish candle. You know, this is a reversal candle here, so a reversal pattern here. So we may see the NASDAQ drop to around 18,000, maybe 18,300, just around this level, just to retest and balance out properly. Then we can start looking for buying opportunities. So obviously, my first level target is 53. Actually, let's scale down and then talk levels. So now on the daily time frame, because previously we are on the weekly time frame. So on the daily time frame, first TP is always going to be the most recent high, which is here, and that is 20,758.4 basis points. So once this is cleared, all right, we have space to the upside to 22,000, roughly 22,800. However, we need to see that descent balance at around this demand level that was created here. And if you look closely, this matches carefully and neatly with my Fibonacci. You guys know, but by now you ought to understand the reasons as to why I don't play around with my fibs. I love my Fibonacci so well. All right, I love it so much, and it has helped me so much in the past. So I kid you not, the Fibonacci too. I think somewhere along the line, maybe once we hit 1K, guys, remind me to teach you guys how to use Fibonacci properly. Once we hit 1,000 subscribers, and I'm just at 925, and I'm very confident in the fact that you guys can get me to 1K before the month of August, guys. This is July, all right. So I'm very confident with I know you guys. I trust you guys that by the time you watch this video, you send this link, this video, share it on your various platforms, and then share it to your Telegram communities. I know you guys can do this for me. All right. However, let's talk outlook for now. So once we hit 1K, guys, remind me to teach you guys how to use Fibonacci for free. I will obviously come on here and then show you guys a lot of cool stuff on the chat, and then also other businesses as well that you can do. All right. So for the NASDAQ, it's just very simple. We need to see a pullback to 18,400, balance out properly, and then we now scale down to maybe the 1 hour time frame or the 4 hour time frame. Make your entries there and hold. So the key thing is that you come on the higher time frame, do your analysis here, and then now scale down to the lower time frame. Place your trades in direction of the overall time frame, and now hold to the take profit point of the higher time frame, so that what looks like a 1:3 risk reward on the daily time frame, if you use your daily time frame to make entries, by the time you scale down to 1 hour time frame or 4 hour time frame, that 1:2, 1:3 becomes, because now you're able to use a tighter stop loss, yeah, because the pip count on the higher time frame is quite high. So you're able to use a tighter stop loss, and that now gives you potential, risk reward returns of maybe like 1:3 turns to 1:5, 1:6, even because you're able to use a very small stop loss to catch hundreds and even sometimes thousands of pips. All right, because now this guy is it has always been headed upwards, or S&P upwards, NASDAQ upwards. So I see no reason as to why we should be looking for selling here. All right, so that's just that for S&P and NASDAQ. We are actually heading upwards. All right, so the next panel on my list now should be, I just want to talk about different pairs today. Let me just start from the ones that can make you money, quick bucks. So oil is actually headed to our POI and also take profit as well, because this is a trade. However, it has just been lagging, just been stuck here, man. And this is the thing about oil. It just takes a while. It just takes a while, and this is easily affected by, you know, geopolitical events. All right, so you just have to deal with that. It's just part of the game. I was going to talk about a pair called German 30, which is also something that you could trade. Let me see. Yeah, so this as well. So the DAX index, all right, the DAX index. So the DAX index also correlates with what the S&P is doing and also NASDAQ is doing. They are all in a bullish trajectory, on a bullish trend right now, and I see no reason as to why you shouldn't be looking for buying opportunities. So let's do some quick analysis on this pair. Let me walk you guys through how my analysis looks like. So now, once you come on the higher time frame, which happens to be on the monthly time frame, you can see something called a bullish trend. By now, you ought to be familiar with trends, yeah? So this is a bullish trend. This is bull, like you're making series of higher highs and higher lows. This is bullish, all right? So what you want to be looking for now is buying opportunities because you're in an uptrend. You want to go with the flow of the river. This is how it started. Started at the very bottom here. It has headed high since then because naturally people believe that, you know, the stocks supposed to, you know, appreciate in value. So it's just always on a bullish trajectory. All right. So whenever I have a pullback, whenever I have a down, like a down moment or down month, it's just a pullback. In most cases, it's always just a pullback. All right. I've seen that happen on the S&P. If I were doing during the COVID-19, I've seen that happen on NASDAQ. I've seen it happen on even this DAX index as well. So also what you need to do is identify your highs and lows here. All right. So once you come on the monthly time frame, look at your most recent levels. So what you can see here, we have this is even looking like a breakout of this high here. Okay, so this is a breakout of this high on the monthly time frame, and then this is what it looks like here. Okay, so honestly speaking, yeah, I do see actually let me just measure something real quick. So the stock market is about to do even exceedingly well again. You guys think the Nvidia gains made sense? You know, you have to watch out for this guy though. So this is my projected take profit point for the DAX. So once you come on weekly time frame, so you're able to identify the flow of the river on higher time frame, which happens to be the monthly time frame. You now scale down to your weekly time frame. You can see that this thing there looks like an inverse head and shoulders pattern with the neckline broken. And this and then this neckline that got broken was also retested. That is, the market created a demand off of this level. So now what I'm actually looking out for is buying opportunities. Do you understand? I just want to keep buying this guy. However, for me to do so, the market has to give me certain confirmations, which is in this case a pullback to this tested level, to this demand level here, which also happens to line up perfectly with something called Fibonacci. Once again, guys, remember me, once we hit 1K subscribers, don't worry, this one is here. I will take you guys through every single Fibonacci secret that has helped me for the past 4 or 5 years in the game. All right, I'll take you guys through each and every single bit of it. All right, so looking at this, nothing looks nothing looks absurd here. This is still the weekly time frame. All right, let me see what this looks like again on the monthly time frame. Let me see if we have some trenders we can use. Okay, actually the most immediate trend I can use right now is this guy here, which happens to be from here to here. All right, so let me scroll down to my actually let me draw that here and see how it looks. Okay, so that's how it looks on the monthly time frame. So let me see what it looks like on the weekly time frame. All right. Okay, so it balances well here on the weekly. So I see no reason as to why these guys should not drop all the way back down to this around 17 basis points. All right, 17,000 basis points. All right, so we need to see the guy drop all the way back down here and then retest this demand level that was created, and then we now look for buying opportunities. So only then can you now scale down to your daily time frame. Let's say on the 1D time frame, this is how it looks like. All right, it is just moving sideways. However, this is our demand level that we're working with. All right, so we need to see the market come in and balance well properly. Once this is done, all well and dusted, you now go all the way down against your one, even all the way down to your 1 hour time frame. The key thing is that just look for buying opportunities. Do you get? And the thing with these pairs is that you want to buy and hold because they tend to take out their highs, their most recent highs. They create new highs. Okay, they create new highs. So you might want to buy and hold. If you're into stock investing, or you want to try and day trade this works perfectly for you. And you guys know that once the S&P is doing well, the rest of the once S&P and NASDAQ are picking up, the rest of the pairs follows suit in terms of the stock market. So that's that for the DAX index. I see no reasons as why we shouldn't rally all the way to 21,300 around there basis points. It is very, very achievable. But for us, we have to see a pullback first. Let's see what this market does around this level. This is the level that will now decide if this guy is going to continue higher or drop up. In my own opinion, guys, listen, from the monthly time frame to the weekly time frame to the daily time frame to the 4-hour time frame to the 1-hour time frame, we are bullish. So what do? You look for buying opportunities. All right. So that's that for DAX index. I see nothing much here, nothing out of the ordinary. Even it needs demand was created here. All right. So don't worry, guys. That actually reminds me. Very soon I'll have my course online, so you guys can proceed to buy, and purchase the course, take the program and learn how to. You can see how I broke down the DAX index in what 5-10 seconds. All right, so just doing your top-down analysis and then coming down here, looking at the chart pattern, seeing the candlestick formation, looking at the demand and supply levels, which one is which. Once you learn how to put these things together, guys, Forex will be an everlasting ATM machine in your pocket. I kid you not. All right. So that's that for the DAX index. So next pair now. Let me just walk you guys through real quick. Okay, so now let's talk about gold. So gold for some time I have been talking about gold, coming down to test this particular demand at 2,160 basis. Keep saying basis point, guys. I'm used to the S&P. So I keep talking about gold dropping all the way back down to 2,150. However, that isn't looking like it's going to happen at the moment. Instead, gold came into this chart pattern and then created a new demand level, which I strongly believe will get tested in the coming week. All right. So I do see gold still at $2,600 per ounce. However, sorry guys. However, we have to come back and test this demand level. Now, the thing with gold is that it's a luxury pair, all right? So you can't really say how much impact any particular geopolitical events can have on this guy, because it's huge. Gold is a luxury pair. All right, this is a luxury commodity, so it's not just something that you just use your technicals alone. You must also double check and cross check with what's happening around the globe. With the Middle East crisis and all of the things coming in, the US election and this whole thing. Every single thing has an impact on this particular pair. All right, they have an impact on oil. They have an impact on this pair, gold and silver as well. So but I do see gold coming into medium term demand levels is actually $2,360 per ounce. If this pair, actually, let me just put this well. So if gold happens to break back down below $2,445.310 per ounce, this now turns into a fake out. And you guys know what comes after a fake out here. After a fake out here, what we tend to have is market melts all the way back down in the opposite direction. So if this is a fake out, if the market fails to sustain outside of this range here, then for some reason breaks back inside here, we would definitely see gold at 2,360 per ounce, and then we can now start looking for buying opportunities. However, for me personally, we still have a demand level yet to be tested somewhere around here. However, you guys know the market can actually create a new demand level or a new supply level, even despite having one that is yet to be validated. That is just how it moves. All right. So for gold, for those of you guys that love to day trade gold, just wait to see what the market does around here. I can see some bit of trend line here. All right, so just wait and see how we react around this base here. If we do see a decent entry opportunity, this will be a decent buy opportunity actually. So you might want to go long on gold once you see a decent, you know, retest of the $2,360 per ounce for gold. So however, primarily my target still remains $2,600 per ounce for gold long term. The next pair now on my list now would be silver. Silver on the other hand seems to be leading gold in terms of, you know, direction and price. So I highlighted silver to the downside around this around 31.389 dollars per ounce. However, for we came on here and then I know we're just telling, so we spent 1, 2, 3, 4, 5, 6, 7, 8, 9 days right at that zone here. However, that was a demand level, and then this place here was simply liquidity. All right, so this was a liquidity zone that got swept, and now this is a demand level that is holding properly, and the market has pointed to the downside. So now long story short here, we could actually breach below 29 dollars per ounce, and then if this happens there, it will certainly expose the $26 per ounce target that I've been calling out for quite some time. And once this level is tested and balanced and validated, where you can see the kind of bounce we had here, yeah, this was a decent confirmation where you have the market break above, come back and test it, and then find its own balance, create a base and bounce out. So once you've seen that bounce off here, this is your entry candlestick here. Candlestick entry, this bullish candlestick is the entry, then stops below and then ride the trend. That is exactly how we'll be entering this guy if we do see a decent chance like that. If you see something that is happening around silver, best believe this is how you go about here. The way for the market to come and test $26 per ounce, balance properly, and then we blow all the way out. And then first level target is $35 per ounce. All right, I see no reason as why we shouldn't hit that level, particularly because of gold keeps creating, you know, a new high. It keeps creating new highs. All right, so silver would definitely follow suit. So the next pair now on my list will be the euro dollar here. So for the euro, it's quite basic here. We've had a fake out. All right, so this is a very well concluded fake out here that we've seen here on the euro. So it's quite simple and textbook, self-explanatory rather. So whenever you have a pair break out of a range and then it fails to sustain outside of that range, and then for some reason it melts back in, it tends to move exponentially in the opposite direction. So what this means is this: if you're in an upward trend, and then you see the market break out of a range, and then for some reason it fails to continue in that direction and then melts all the way back down, the market tends to continue melting down. So now this now coincides with what I spoke about this our demand level at 1.08045. I'm still very keen on seeing the market balance properly here. Once I see that decent balance here, guys, we are blowing all the way out to 1.10500. However, this is where we want to see the market come into. Okay, you must place your levels nicely, because the market tends to move from one level to the next level, but however it has stops in between, and those stops in between are your minor supply and demand levels. In this case is 1.08053. So let us see a decent balance out on this level here. So once this is done and dusted, we can now start looking for buying opportunities to the upside. So my prime target after this first point here is 1.09051, and then obviously is subsequently we could rally into 1.10500 because of what did the XY did now. So we have seen a double top on the dollar, so that could crash further, and once that happens, we tend to see every single pair traded against the dollar, you know, rally all the way in the opposite direction. So for the euro dollar is very simple. We need to see a decent bounce around this 1.08087 region, and then once we see that decent balance here, we can now blow all the way out to the upside. So that's that for the euro. So similar scenario now for the pound sterling here. Similar scenario here. We've had the market break above here. It broke above, but it failed to sustain above. Yeah, it failed to stay above here. It is now melting back down. All right, so this is also very understandable. I can explain this to you because now if you look closely, you can see something that looks like an inverted shadow pattern on the pound sterling. Yeah. So this is the head here. This is the left shoulder. This is the right shoulder here that has formed. However, this is the neckline that got broken. The neckline broken here. So we somewhere around here. Sorry, hold on. Neckline broken here, and around that neckline point was when the market created its own demand level. So do you understand how the entire thing is just lining up well with the whole bullish move? So you can see that what you're looking out for as a neckline is also what I'm looking out for as a demand level. Okay, so I have two solid levels I'm watching out for. However, the one that has captured my interest the most is one around the 1.28000 region. So I need to see, because this is also a rounded figure. This is 1.280. This is a rounded number, and the market tends to respect round figures. All right, so we could actually see this guy melt all the way down to 1.28000. Once that is done, so we can now start looking for buying opportunities all the way. My first level target is obviously recent highs. Okay, this is the daily time frame, guys. So recent highs at 1.30033. And once that is breached, we could see this guy at 1.32000 for the pound sterling. Right? It's pretty easy. However, but first and foremost, we need to see this guy drop all the way back down to our demand level. All right, so that we can have entry opportunities to ride this guy all the way to the upside. I see no reason as to why this should not happen, because now the dollar index is starting to pull back, although it is looking like it is going to crash for that. Yeah. So now the 1.27814 is a POI. Once we see a decent balance around here, what we now want to do is scale down to the 1 hour time frame, guys. Let me show you guys a trick. So if you make your entry on the daily time frame, it is going to take a very, very huge stop loss, pip count. So let's try and experiment that and see. So for this now, this is 70 pip stop loss, right? And then this is what a 1:5.63 risk reward. This is 70 pips. Now scale down to your 1 hour time frame and see something. Yeah. So if you have your entry on the 1 hour time frame, yeah, say this kind of pullback was what you saw, yeah, and then you pick one of these candles, yeah, and enter, or even let's say you have your counter trend line here. Okay, so you have your counter trend line here, and then this is it. Entries are here. Okay, and stops are below. You can see that with the 1 hour time frame, we are able to use 56 stop loss, 56 pips of stop loss. So now let's try and parade the RR. So now you can see what was a 1:5 risk reward is now 1:6.8 giga, and you can further fine tune this to suit your own trading style. So that's what I mean. You need to spend time with the chart and then develop your own edge. All right. So it is just very, very simple. We need to see a pullback on the pound sterling. Once this is established, we can now start looking for buying opportunities and then ride this guy all the way to the upside. That's just that for the pound sterling. I see no reason as to why this guy should not pull back deeply to this level. Once this is done and dusted, we can now start looking for buying opportunities to the upside. So the next pair now on my list now would be the AUDUSD. Okay, so for AUDUSD, we have been highlighting this particular demand level somewhere around here now. But let's go down. Let's scale up to the weekly time frame and see how things look from there. So from the weekly time frame, we can see that this is also looking like a higher low from here. So this is printing higher lows. All right. So this is quite bullish. Okay, this is quite bullish. Although we have a supply level that is yet to be filled up here. However, this is pointing to the upside. Okay, so now what we need to see is just a pullback to this whole point here. Once we see this, although this is looking like a weekly engulfing candle, but best believe this guy is actually pointing up at the moment. So you want to be looking for buying opportunities because of what the dollar is doing. Right? The dollar looks weak, and it looks like it will keep getting weak. So now once you have identified your demand level here, you simply wait for the market to pull back. All right, this is it, guys. All right, so that is your demand level is at 0.6659. So once the market balances well here, you can now start looking for buying opportunities on AUDUSD. So the first level target is obviously recent highs, okay, of 0.67988. After that is breached, we now have room to 0.68594. Right? So that's that for AUDUSD. The next pair now is GBP CAD. So for the pound card here, it is likewise likely what is also happening across the board for the pound sterling, we need to see this guy drop all the way to 1.74369. Although we do have a level that was broken out and we tested on 4-hour time frame somewhere around the 1.74500 region. However, I do not believe that this level holds that much weight to reverse price. So I do believe that the market would melt through this and come to 1.74321. However, whatever thing that the market chooses to do is entirely up to it. Our business here is not to try and predict, but to make money from the market. All right. So the pound card is still bullish. In my cards, I have the target of 1.83639, you know, as my first level target, and then subsequently we could rally into 1.92000 region. All right, so that's that for the pound card. The next pair now on my list now would be, let's see, the NZD/USD. So NZD/USD is slowly headed towards our take profit point. You guys, I called this trade here on YouTube and then I called it out also on Telegram. Okay, and I'll leave the link in the description, so make sure that you check it out. All right. So long story short, my take profit point remains 0.60200, which all happens to also be a demand level. Entries are made somewhere around here. If it doubts me, you can go back and check out my previous videos. All right, so this was where the entry was made around here, and then from there we've just been melting all the way back down. I see no reason as why we should not, you know, collapse further into the 0.60200 region, and then from here we now start looking for buying opportunities. Why? Because this is a double bottom here. This was the first demand created, so this is the second retest, and then we could blow all the way out. And if you go up to the weekly time frame, you can see where this trend line is coming from. So we could actually see a third touch of the trend line on this pair here. But long story short, I'm bullish on NZD/USD. However, we have to come and test these levels first. So the next pair now on my list would be AUDCF has pulled back nicely, although we still have some room to the downside. Nothing much on BTC. BTC is just sitting around the level now. I need you guys to understand one thing. Now, if I tell you guys that a pair is gonna sell and I'm waiting for a level to get tested, what you need to understand is that I'm waiting for the level to get tested, and then also I need to see some confirmations. All right, because anything could still happen. You could see the momentum we came to test the 65k 64k region. We just blew through with this bullish engulfing candle. So you want to watch out for momentum, because momentum always surpasses price. All right, so if the market breaks through a level with this sort of momentum, chances are it wants to continue higher before it now starts mounting. All right, so that's why I never spoke about BTC again for a while, but I'm still bearish on BTC. However, I need to see this guy fold all the way back down. Once I see a decent folding all the way back down, like a nice 4-hour bearish engulfing candle, melt back down below this bar, I'll definitely call out this trade for you guys. However, as far as this guy remains above this yellow bar here, I see no reason as to why you should hurry this trade. All right, just wait for the market to give you a decent opportunity. A 4-hour engulfing candle back down here, entries made, stops above here, and then you ride this guy all the way to 43k. I called it out for you guys. Best believe I called out BTC from 71k all the way to this point where it is, and I'm still calling out boldly claiming that BTC is going to $43,000 per coin. This year or early next year, we are definitely smashing $43,000 per coin. All right. However, the market has to give you the best opportunity first before you now start looking for buying. Just wait patiently, because in trading, the most money is made by waiting. You either wait after you place the trade, or you wait for a decent trade setup. All right. So that's just that for BTC. I think it lines up nicely with also Ethereum. Those pairs are very, very, and also one thing is that if BTC is coughing, the entire crypto ecosystem coughs as well. So you might want to be checking with BTC as you do your analysis for your sports trades, and then futures trading as well. Just double check with BTC. So for Ethereum here, you can see that this is the first touch, second touch, third touch here, and then the market is currently rejecting off of this supply level. So what I need to see is how this candle closes on the 4-hour time frame. If I see a decent and a well convincing candlestick close, maybe below this whole thing from here, all right, entries are made. Do you understand? Entries are made, because this is looking like a head and shoulders pattern on the 4-hour time frame, and this is around a trend line touch of the trend line. Then this is also around a supply level, guys. Ethereum is going to drop. However, we need to clear this base. Once we clear this 3,376.76 region, entries are made immediately on the next 4-hour candlesticks that breaks below here. Entries are made, stops above, and guys, you know where your targets are. All right, even if you enter here, your stops must always come above the high, and then you must target. This is TP1 is 2,879.83 per coin, and then obviously 1,672.27 per coin. All right, we have space to the downside. The next pair now on my list now, last but not the least, let me see. Let's talk about the pound yen. So for the pound yen, it's still pulling back, still coming into our area of interest. I have been calling out these guys. Guy, you will not the problem I have the yen pairs is that they don't pull back easily. It's just always bullish. If you check these pairs, they've been bullish for years. Do you get? However, finally we are starting to see some bit of pullback. Finally, after ages. So I need to see the market also come into 198 region. Once this is done and dusted, then we can now blow all the way out. All right. So the first TP here is 216, and then obviously areas of 250, becomes a prime target. All right, so that's just that for the pound yen. Also, same thing with the euro yen. We are having a decent pullback across the board for this guy, especially because of the way the euro is pulling back, the pound is also pulling back. So these pairs are also going to pull back because the dollar is strengthening, and then also the Japanese yen index is also strengthening as well. So all these things just add up to give you a decent pullback. So for AUDJPY now, we do have some more space to the downside. Once this 103 region has been tested and confirmed, we can now start looking for buying opportunities all the way to 116 points here. So yeah, so that's just that for those pairs. So now let's talk about the elephant in the room here, which happens to be the dollar index. All right, so for the dollar index, by the way, so far, guys, if you're finding value so far, I urge you guys to please take me to 1K, you guys. Just click on that subscribe button, leave a like and comment, guys. Let me know what you think about these pairs. All right, just let me in on what you think about. Oh, I think one of you guys mentioned that I should talk about USDCF. Hold on. Someone said I should talk about USDCF in the comment section. So this is just this goes to show that I read your comments, I respond, and I respond to them, and I plan for them. So you said I should talk about USDCF. So yeah, this is what I think about USDCF. It is coming down to 0.875. However, we need to see this guy, first of all, go back and test 0.9044. This was the supply level he created, yeah. And then whenever you have a market create, I've said these things separately. Whenever you see the market create a supply level, the market will most likely go back and test it before continuing. So I think I'm going to take this trade, guys. Hold on, let me check something real quick. I think I'll be hopping on this one with you guys, for real. So the market broke above here and created this demand, and ever since then it didn't come out to retest it. Now this is a decent supply level somewhere around here. This is a supply level around here. Pardon my green bar. I like them because I don't want to mess up my charts with too many zones. So this is a decent. You can see that when the market created this supply, it came out to test it and then dropped. Came out to test it again and it's currently dropping. So now what I also want to look out for is we have this demand level that's created here, but not even validated. And then also the market proceeded to give us a double top, which the neckline has been broken and retested. So now what we need to do for we latecomers, because I didn't see this pair on time, I must admit. So for we latecomers, we need to see the market come in and retest this supply level here. Once we see a decent retest here, all right, entries are made, guys. Entries are made on 1 hour time frame. We take we place our sell trades on 1 hour time frame, and then we now target obviously 0.87600. So let's see how this would look. Let's just create it and see how many pips or how profitable this pair would be. So this is about 260 pips to the downside. All right, this is a decent 1:3, 1:4 risk reward, not bad at all. not bad at all. So, but first of all, we have to see the market come into this into this green bar here, test it properly, and then now give us a chance to collapse this guy all the way down. I'm bearish on anything that has CHF in it at the moment. All right, so we have to see this guy pull into this point and then collapse it all the way to test this demand level properly. Then we cannot decide. And then also because of what's happening across the board for DXY, you don't randomly go into all these pairs without checking the SY as well. So check carefully and be sure, because the reason as to why this guy is pulling back is also because the SY is also pulling back. Do you understand? However, long term they look bearish. Do you get? So selling opportunity is this, and however, we have to see the market pull back into this 0.9047457. So the next pair now on my list now, the last pair on my list actually is the XY. So this is the reason as why we're having so many rigmarole in the markets, so many indecisive moves in the market. This guy, this bad boy. So let's talk the XY. So for the dollar index, we have been talking about bullishness for a while. However, the market has failed to give us new highs. At every single attempt of making a new high or even equal high, instead it gives us a lower high. Do you get? This high is higher than this high. This high is higher than this high. So this is now looking like it is in a downtrend. However, once we scroll down to the daily time frame, we can see something that looks very, very decent, like so. So we have this double top created here. Now, this is the market is currently sitting on the neckline. However, we have this supply level here, this urgent supply level here waiting for us. So once this market comes into 105.1775 region, we should actually see the dollar index collapse all the way down. So my projections for this pair, actually, hold on, let me just double check something. If this double top holds, my projection for this pair would be at least we should see this guy collapse all the way to 101.518, at least this level. All right, at least this level. Okay, then if for some reason if that doesn't hold, we could see the XY collapse all the way to 100.51. That's 100.55. However, these levels might sound a bit generous. However, anything is possible. You get? Anything is possible with this dollar index. Considering the fact that we have the US elections in 4 months, so this whole thing is just there's a lot of uncertainty in the market at the moment. However, let's just trade what we see. Let's leave the future to take care of itself. So for this guy here, we are out of this trend line, this upward trend line here. We are out of it here, and then this was broken and retested somewhere. This was broken into here. All right, so this also created a supply level for us. So we need to see the market come back and test this supply level here, and then we'll now be very, very confident on shorting the dollar. I'm bearish on the dollar, believe me. However, we need to see this guy fold. I actually rise all the way up to 105 region here, which is 105 points. Maybe 105 is a rounded figure here. So this guy has to come in here and then drop for that before we now start looking for selling opportunities on it. However, I am bearish to this dollar because you know why? This high is higher than this high. This is a double top with the right shoulder or right leg, right shoulder, lower than the left shoulder. So this is looking heavily bearish at the moment. So we could potentially see this guy collapse all the way back down, and that is going to happen. Why? Because I can see for sure that we have. So let me tell you guys one thing here. So this is what we have seen on the dollar so far. All right, it gave us 2 shoulders here. It gave us 1 head. This only gave us 1 shoulder. So we could see this guy come in to give us that second right shoulder before any chances of bullish trend comes into the picture. All right. However, at the moment, I'm heavily bearish on this guy. So this will be the deciding factor here. This is also a deciding factor because we could get here and decide, well, screw that, we don't want to fall anymore. We want to go higher. So anything is possible with this market. However, stick it to my channel and make sure you subscribe and turn on post notification will also help you navigate these uncertainties. All right. So once again, that brings me to the end of episode. All right, so my name remains Desmond Samuel, and thank you so much for sticking to the end. Make sure to like, subscribe, and then send this video across to as many platforms as possible, guys. I believe in you guys to take me to 1K. You guys have seen how much value I bring to the team. All right, so please take me to 1K. That's all I ask for. And once you get me to 1K, they shall be giveaways, and then I shall come on here to show my face for the very first time. All right, so thank you so much, guys, and see you in the next episode. Peace out.